Good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft. I'm going to be your host here for the next hour and a half or so. Just bear with me while I get you my monitor. I'm just applying my trade manager to my charts. There we go. We're all set. Okay, so the market's just opened up. A real quick overview for those of you who are new to our trading room this morning. First off, welcome. What you're looking at here is the diversified trading system, and it's diversified because we're actually looking at the market from 3 different points of view. And this is not simply different time frames. These are actually tools that have been designed to pick up different market environments. So here in the top left, we have the Hawk Scalper. The top right, we have the Falcon Swing Trader. Bottom left, we have the Eagle Trend Trader, and the bottom right is the Raptor. The Raptor is the latest addition to the DTS family. I just see a signal developing here on the Falcon that I'd like to take. Oh, it's running away on me. Maybe I can still catch it here on the Eagle. Yes, I can. Oh, just hold on a second there. Can I cover you up there? No, too far. What about there? Okay, I'm going to set you up to take you below the low here. I'm going to explain all this to you shortly. Just see a signal that looks a little bit promising right out of the gate. Okay, so as I said, these tools are all developed to pick up specific market environments. The charts I'm looking at here are the NASDAQ. I'm also following soybeans and crude oil, but I would be happy to take a look at any chart which is of interest to you. This is actually a little bit I don't usually do this right out of the gate, right out of the opening bell. The Eagle is one of the few tools that I will trust early on. Actually, what I should do before I get involved in a trade there is I should shoot that trend line. Yeah, there we go. So the market was ready, but it wasn't quite ready. So we'll cancel that signal. All the signals develop the same way, regardless of the tool that you're following. Probably the easiest way to see them is here on the Hawk. These blue dots, by the way, that I'm about to turn off, these are our stop strategies that we get to choose. There's 16 different stop strategies available, and each one is fully customizable. The signals all develop the same way, though. We get a warning dot, and then when the signal parameters are met, we get a triangle and a hash mark. And that tells us that we have a tradable signal. Now, not all signals are created equal. Each tool has its own set of high probability signals that we look for. In the Hawk here, for instance, we don't normally consider these yellow bar signals. Looks like we have a little bit of a sideways trading range going on. Perhaps. So that's the NASDAQ. As I mentioned, I'm also following soybeans and crude oil. Sean's asking for the E-mini. 1 second, Sean, and I will load an E-minute chart for you. All right, we are working on a first micro-macro cross signal here to the upside now. This is one of our higher probability signals. It's still so early though. Oh well, let's see here. I always tell people in the room that the first micro-macro cross is one of these signals that I take almost without exception. I could frame that a little bit tighter. What I'm concerned about here is the lack of what we refer to as a test of the extreme. Namely, this is the low. We need to see the sellers try to recover the market and fail. So we're actually working into a macro pullback signal now. And soon it's getting itself to the point where I'm just going to want to throw a onesie on it. Oops, I moved a little bit too fast for me there. The safer place to buy here is above this swing high. And now that we have this swing in here, that would be a better setup. All right, let's see what we're getting here. I'm hearing some signals on the Eagle. Oh, and we had a trend change signal on the Falcon and the Raptor also. All right, so the market's still sorting itself out a little bit. We'll get back to that in just a moment. I promised Sean a E-mini chart, so 1 second, let me get that over here. All right, so just loading an E-mini chart. Oh, thanks, Jim. Oh, wow. Jim giving me the advanced decline numbers very heavily skewed to the downside. We've got only 400 buyers and about 2,200 sellers. So about 1,700, a negative 1,700 on the advanced decline. We'll see whether how that plays out. The Eagle's still moving a little bit sideways on us. Let's take a look here at the Raptor. As I mentioned, this is the latest addition to the DTS family. The Raptor is actually a one-screen system. It is a blending, if you will. It incorporates elements of the Hawk, the Falcon, and the Eagle. You'll notice this trading band through here. This is borrowed from the Eagle. The Eagle Trend Trader has been programmed here into this filter on the bottom. A lot of the signal generation comes from the Falcon, and the Hawk has been incorporated into the bars as well. Oh, by the way, there's some system add-ons which I'll show you. And Francisco asked a great question. Francisco is asking, how do you see the buyers and sellers? Well, this little tool right here, this is called the Geiger counter. This is actually an add-on, and let me get you the link where you can find more information about some of these things that you're going to see here this morning. So if you're interested in tools like the Geiger counter or the support and resistance lines that I'm going to show you here in a moment, if you follow that link there, that will get you to the page with more information. Now, the Geiger counter is essentially like a tape reader. So you can see the buying and selling action. You can see right now our needle is getting red, so we're getting a little bit more selling pressure. And I just heard a scalp signal. All right, so we just got the warning. Oh, and Sean was asking, can I see the E-mini on the Raptor? Of course. Let me load it on the Raptor for you. And yes, I'm bringing it over, I promise. Just let's get this all loaded up. So a little indecisive this morning. We did have this macro pullback signal here on our hawk. I was a little reluctant to take it though because the lack of the test of the extreme. And now it looks as though the sellers are taking control of the market once again. We'll see what happens as they get back down here, whether or not that's going to cause a bounce or whether they're going to start to shallow out. If they start to get a little bit shallow, then that actually gets a little bit bullish. Okay, so here's the E-mini on the Raptor. And you can see pretty much the same kind of deal as what we've been looking at on the NQ. A little bit of a sideways range. Let me get my Trailblazer put on here. Oh, I already have it there. There we go. So I've got my Trailblazer on here now. And the Trailblazer is our trade management or our trade entry system. We have two. We have the Trailblazer and we have the Trade Manager. The difference between the two is the Trailblazer does not have the risk management component. We had to give that up in order to give you a one-click entry system. And what I'm looking at here is possibly shorting this signal here. That's printing. If the market fails and heads lower, I would just hit the sell market button and I would get my orders and my profit targets set according to my parameters here. So I would have one trade for 10 ticks. I would have a second contract for 0 ticks, which means it's a runner. Let's see if we can get a signal here. I can also enter my orders this way, right? I can put my order in and I can just kind of snuggle it below there. Oh, way to go, Jim. Jim already bagged 42 ticks out of the YM. Well done, Jim. We'll just sit with this one for a little bit to see whether or not we can get a fill. Okay, the E-mini kind of holding its own at the moment. The real tug of war going on this bar. I'm going to show you something else here in a moment in regards to Francisco's question about the buyers and the sellers, which I think is very important. I'm just putting my trade manager on my crude oil chart. Here we go. Okay, all set. This chart style that you see, these are called the mean Renko bars. These were actually specifically designed for DTS, but you can purchase them as an add-on now. The nice thing about the mean Renko bars is they incorporate the strengths of a range style bar and all the advantages of a candlestick bar. So you have the power of a range bar, you have the sensitivity of a candlestick. So it makes it very easy or easier to see who is in control of the market. So you'll notice the price swings show you very clearly that right now we have the buyers in control through this section right here, right? We're making higher lows, we're making higher highs. It's the buyer's market at this stage. So what happens all of a sudden is we start making lower lows and lower highs. And at this stage, it's a little bit difficult to determine whether this is just a retracement phase and the market's going to head higher, or if it's actually going to break down and head lower here. That's why this current bar is so important, because if this bar trades higher, then we're likely going to see higher swings again, in which case the buyers have control. But if this bar breaks down and fails, well, then this sell signal will validate and we should see the sellers retake the market. Angelo is asking, when you purchase, do you get installation support? Yes, absolutely. Ben is our support guy. He's also one of the programmers, so he knows this software inside out. And believe me, if it can be broken, I've broken it. And Ben has fixed it. All right, so the trade manager here, we took this signal now. Notice that we automatically got our stops. We automatically have our profit targets. We have our break-even trigger. My profit target's a little bit higher than I would normally have for this trade, but we'll see how it works out. Come on, bears. Oh, they're trying. Good question here. Sean's asking, what's the difference between the hollow candles and the solid ones? Oh, by the way, on the Raptor, I get people asking all the time, can I change the colors? Yes, you can change the colors. These hollow bars, if you think of your traditional candle, where your open is low and your close is high, in other words, it's a bullish style candle, those would be your hollow bars. Your solid bars are just the opposite. They're the ones that open high and close low. So the solid bars show you a bearish move. The hollow bars show you a bullish move, regardless of the color. You'll notice they also paint bullish or bearish, blue being the bullish sign. This very nice fuchsia hot pink being the bears, and then the yellow showing a market that's in transition or relatively neutral. Jim, one of our members, discovered a very cool transition signal that comes off of these yellow bar clusters. In fact, one was right here. This Jim always phrases it better than I do, but it's essentially a failure of the sell and it generates a buy. Notice how Trade Manager has been rolling our stops for us. So as these blue dots progress, that's according to the stop strategy that I've enabled, currently the ATR strategy. It will roll our stops. We're just about to hit our first profit objective. Hooray. So notice one of the trades were automatically taken off. We also have a break even button here where I could force the trade to break even. So see, our stops keep rolling. Now there's different stop strategies. If that's too liberal for you, you can say preview something like parabolics, and you can say, oh, okay, well there's parabolics, or the bar high low is the most aggressive strategy. And I tend to get very aggressive with the bar high low, maybe 2 bars in, 2 ticks back. Sure, why don't we do that? So you can see I click the accept, and now all of a sudden I'm in the bar high low strategy, and it will manage the rest of this trade accordingly. Oh, in fact, they're starting to get a little bit anxious there, just hovering above our break even trigger. I'm going to force this trade to break even. So we're currently break even +1 on our second contract, which I had in as a runner. I was looking for a little bit more follow through. I'm sure we're going to see it head lower. It's just, can we ride out this little mini reaction that we're seeing? Notice our Geiger counter getting a little bit more on the bullish side here. So the buyer's struggling to find support. Oh, they're really putting in an effort. Now we got to see if the sellers start coming back here. Oh yeah, there they are. There's a few sellers. Oh, they might have. We'll see whether or not that traps the buyers. Of course, we got to get here below 2052. That will trap all these buyers right here. If we trade below 2052, we should see a little bit of follow through to the downside. The Geiger counter, a great tool for helping you judge whether or not you should stay in a position, or whether you want to tighten your stops, or how you want to manage your trade. Come on, let's go. So here come the sellers now. Again, this bar, very similar to the bar that we were watching here when the signal printed. Very much a tug of war type of bar. The buyers and sellers very evenly matched. Okay, you guys have got some great questions here, so just bear with me as I watch this trade. Come on, take out 2052. There we go. Come on, where's that follow through? Let's trap some of these buyers out of their trades. Okay, look at the selling pressure now. So it's the same thing. If the sellers, they're applying a whole lot of pressure here. If they fail now, then we should see the market trade a little bit higher again, at least short term. Oh, see that little bit of a peak in there? That's not very promising for the sellers. Let's see if they can come back with that. All right, I'll get to some of your questions while we're letting that unfold. Make sure I didn't miss anybody up top here. No, it looks like we're good. Okay. Angelo asked, do you get when you purchase the program, do you get installation support? Yes, absolutely. I think I answered that. Sam is asking, is it possible to develop a money management strategy and save it so it can be used in an automatic trading strategy as an ATM? More automated than what we've already done? Are you talking like a black box type system? If that's your question, no, not really. Adam is actually working on a black box type trading system. It is very selective with its trades. It generates maybe 1 or 2 signals a day. It's not, but you know, if you don't want to sit there and trade the markets and you're prepared to take 1 or 2 signals a day, then that's fine. And there's absolutely nothing wrong with only taking 1 or 2 signals a day. In fact, those of you who have been in the trading room with me before know that when I'm trading, I usually have like a 2 or 3 trade quota on the day, because it's not, see, a lot of people don't understand this. It's not the quantity of signals that will make you money. It's the quality of the signal. A lot of people think you need a system that generates more and more signals so that you can take more and more trades and make more and more money. You can see we're just about to get tapped here on our stop strategy. Voila. And that's how our Trailblazer works. Just going to go back to my ATR stop, which I tend to like for my beginning. So not a bad little trade. Not as much follow through as I was hoping for, though. So the market's still a little indecisive. But yes, that's a problem a lot of people have, is they think that they need to take a lot of different signals because, hey, in the brick and mortar world, or in the non-trading world, I should say, more signals means more money, right? You produce more widgets, you make more money. But in the trading world, what you're looking at is you're looking at a quality signal. So here we have our first macro crossover signal, also happens to be a macro pullback signal. So what you want to do is you want to go in and you want to take this with size. And by that I mean as much as you can afford. And this is where people drop the ball also, is they end up trading more contracts than they can afford. That's why you'll notice here on the trade manager, we were just looking at the Trailblazer, which is more of a one-click trade entry and management system. The trade manager has this risk component where I can dial down my risk amount. In this case, I've limited it to 2% of my trading capital, which means that regardless of where I place my stop, I'm always going to end up risking 2% of my capital, which is an amount that I should be able to afford to lose, right? 2%. You could take 10 losing trades in a row and still have no more than a 20% drawdown. So notice here I have the trade set up and I'm risking approximately $400. Now don't freak out if $400 seems like a lot to you if you're trading a smaller account. This is what is relative for my account. If I set up the trade tighter, oh look, I'm still risking $400. If I set up the trade really loose, let's say way up here, oh, I'm just on the cusp. Hold on, I can go a little further. If I go way up here, all right, well, I'm risking $300, but you get the idea. Notice what has happened though is the quantity has changed. So here I'm only trading one contract. Here I'm trading 8 contracts. Here I'm trading 3 contracts, but the risk amount never really changes, except when I did the single. But what happens is that you dramatically increase your probability of finding a winning trade, because trading is part signal generation, but it's also being able to hang into the trade long enough to realize a profit. Now, DTS is very good at picking up momentum, so you could, set up a trade like this. Oh no, actually, this is a good example. Usually with the DTS signal, you get immediate momentum. So this is the problem most people make, is they frame their trade too tight. What happens? The market pulls back a little bit. Oh, sorry. The market pulls back a little bit, stops you out, and then goes on to your profit target, right? To me, that is the worst thing that can happen to you as a trader. So here's your warning dot. You get your triangle and hash mark. Give your trade a chance to work out. Just in case there's a little bit of a pullback, in this case there was, the trade has a chance to reach its profit objective before hitting its profit target. So trading, I believe, very much about probabilities, not just, things like risk-reward ratios, which personally I don't believe work very well. Okay, we're actually working on a red bar buy here. I wonder if we're going to see the market try to pop to the upside or not. Sam is asking, how does the trade manager know the value of the contract? Where does it get that info from? Well, it's basing the information, your position sizing, on your account. So it's here when you go to set it up, you enter your account number, and it will go to your account at the brokerage. Otherwise, you can also force an account balance. So you can go up here to the top of it and you can type in whatever your account balance happens to be. And it will use that information to generate your position size. But yeah, if you go here, oops, I need to turn it off to make changes. So if you go here, you can choose your account and then it will default to those values. Or as I mentioned, you can set your account balance. And then once that's all done, you turn your trade manager back on. And you're ready to go. Very, very important tool here. It cannot be overstated. Perhaps the best tool ever developed for the retail trader. I've never seen anything else even remotely close to it. And the people who programmed this, I've shared this before. One of the fellows programs the guidance systems for cruise missiles for the US government. No word of a lie, that's what he does. So you know that programming's tight. Yeah, okay, so Sam's asking, I mean the value of, say, a US Canadian dollar pair versus the 30-year bond contract. Well, it knows the tick size, right? It incorporates the tick size. So here I'm trading the NASDAQ. It knows that it's $5 a tick. If I'm trading a US Canadian dollar pair, I think that's a $10 tick value. If it's trading the 30-year bond, it knows that it's a $31.25 tick value. So all that has been incorporated into the tool to help determine your correct position size. Sam says, so it's built-in table for all those contracts, no need to add it anywhere? No need for you to add it. The only information you need to provide is your account, your balance. And yeah, Sam says, awesome. Yes, it is. It is a very awesome tool. The best thing about the Trade Manager is it prevents you from blowing yourself up. I think that's the number one benefit of the Trade Manager. The number two benefit, and very closely related, but it also maximizes your earnings. So it's quite literally the best of both worlds. So let's say we're looking here at this particular trade, this first micro macro cross signal, which is developing right here, also happens to be a macro pullback. let's say I'm going to set it up. I'm going to cover back here, which I tend to do. I look for swing points, or I'll if I'm not clear, because you can see in this instance, my stop strategy is actually flipped. It's on the bottom. So I'll probably start my trade up here somewhere, at least until my stop strategy gets back in sync with the market. So I'll take this trade, but what it's doing is it's maximizing my earnings. So instead of just being a onesie-twosie trader, Trade Manager is saying, hey, Eric, you could afford to take 3 contracts. And what does that do? Well, all of a sudden, I earn an extra 50 bucks on this scalp, right? So it goes in, it goes down. I nail it for 150 bucks. And in this case, if I had had a runner on it, I would have done a whole lot better. We would have ended up getting stopped out down here somewhere. But what a lot of people do wrong is they overcapitalize their losers and they undercapitalize their winners. I get people coming to me for coaching and mentoring and so on, and almost always I'll see them do something like this. They'll go in, they'll take a trade, and they say, oh, I'm going to be really conservative trader. I'm only trading a small account. I'm only going to trade 3 contracts. Okay. You might not be able to afford 3 contracts, but that's how they think. So they trade 3 contracts on the first trade, and let's say the trade goes south on them, which very often the very first trade of the day tends to do. It throws you that curveball. You swing at it, you miss, and all of a sudden they're looking at, say, I don't know, a $300 loss. They take a second trade, again with 3 contracts, and they take another $300 loss, and now they're in the hole 600 bucks. And they say, oh, the markets aren't behaving very well today. I better scale back. I'm only going to take a single contract on my next trade. And what happens? That one turns out to be a winner, and they make $200 on it. So they overcapitalize their losers. They undercapitalize their winners. They're $400 in the hole, right? But if I always use the trade manager and I never risk more than I can afford, it doesn't matter whether I place my stops like that or whether I actually give the trade a chance and place my stops up here. Like, which trade has a better probability, not risk reward? Which trade has the better probability of success? Well, obviously this one, the one with the great big stop. It's more likely to find its profit target than this one here, which would have just been stopped out. Right? It's a very foreign concept to a lot of people, but if you want to know how the professional traders make money, this is how they make money. They look for a high probability signal. They give the market some room. Don't worry, the sellers aren't going to give this up. I can place a deep stop. The sellers aren't going to walk away from this market entirely. It's not going to go to the moon like this, or it could, but it's very unlikely. It's more likely that somewhere through this little pullback, the sellers are going to step up again. How do I know? Well, gee, let me guess. The sellers have been pressing the market all morning. They're not just going to walk away from it. They pressed it really hard here the last time the buyers tried to buy in. So once the sellers start to press again, and let's say that this bar forms like that, and then the next bar like this, and like this, oh, guess what? The sellers are pressing. So now I can take my stop from up here, and I can start to roll it down. Or use maybe like the bar high-low strategy, which will roll it bar for bar if I want. So now all of a sudden I've taken my initial $300 risk and I've reduced it probably to about half, maybe even a little bit less. But I didn't strangle the trade right out of the gate, right? I gave that trade a chance, which is very, very important. So they haven't recovered it yet, but they will. Whether or not they'll recover it and resume the trend, well, that's up for debate. But the sellers will not walk away from this market. That's why I don't have a problem running a deep stop. I know I'm going to have a second chance. See, there they go. This is actually a green bar sell, by the way. I could have sold that. Thanks, Jim. Jim says they're all firming up, even the DAX. He says, watch that 10 a.m. low. There might be some support. So at this stage, if I were short this trade, I would be rolling my stop now definitely above this little itty bitty swing high. Because if the sellers fail at this point, well, then the buyers are going to take the market. In fact, with our green bar sell, I can show you this. This is our green bar sell. It's our counter trend signal. I can actually set up to buy it, or I can use it as an early warning. A lot of times we'll just use it in anticipation of what we call the first micro macro cross, which is getting ready to build. Oh, and now we're into yellow bars. So all bets are off, at least as far as the hawk is concerned. I promised to show you the ultimate support and resistance suite. That's these lines that you see on here. This also an add-on, folks. It will work with any chart style that you can plot on NinjaTrader. And it forecasts the support and resistance lines for the next day. So the gold line is your median line. The blue line below is primary support. The blue line above is primary resistance. And then once you get through those, you get your secondary support and secondary resistance lines. And you can see we're just trading off of primary support right now. If the market, I was going to say if the market holds below here, we'll get a little bit of move to the downside. We did. Now we're working on a trend change signal. So we need this trend line to come back, turn red, and then we may have something saleable. If it stays green and produces a green signal, we should see a bounce off of the primary support, maybe take us even as high as this median line again. Wouldn't that be something? Sean is asking, can I see those lines on the E-mini? Absolutely. Let's just throw the E-mini up here. Oh, no, I've got the E-mini over here. There we go. Now, with these tools, you can, or these add-ons, you can put them on any chart you want. I tend to delegate one per chart just so things don't get, too cluttered, but you can certainly put them all on one chart if you like. The lines will be the same, right? Regardless of whether I put this on the Raptor or I have it here on the Falcon Swing Trader. Whether I put it on the Raptor or whether I put it on the Hawk or the Trend Trader, the lines are all the same. So we're still fighting this primary support zone. Definitely a seller's market today, I think. Okay, so we're working on a trend change signal now to the downside. Trend change signals on our Falcon, pretty easy to recognize. It occurs when the trend line changes from green to red or from red to green. And we're looking for this alternating signal. So here's the down. Here come the buyers. If the buyers fail here and produce a sell signal, that should be a saleable signal. Or is that sellable signal? Oh, way to go, Jim. Bagged another 22 ticks on the YM off of the hard edge trade. Well done, Jim. You're knocking it out of the park today. Yeah, like Joe says, he says the trade manager is a lifesaver. It is. Like I said, it will keep you from blowing yourself up, which is very important, I think. Having been someone who's blown up accounts in the past, Trade Manager would have saved me a bucket full of money. All right, so we're generating a warning dot. I don't have the signal just yet. I could anticipate the signal, but we'll let it unfold. Phil is asking, can I trade Forex on MT4 platform with this? Well, you can trade Forex, but it only works on NinjaTrader. So you'd have to either change charting systems or run a Ninja chart in parallel to your MT4. The reason that is not that we have it in for MT4 or anything like that, or TradeStation or any of these other softwares. It's that well, quite honestly, the programming behind those other systems is not robust enough. Okay, so this is a little bit tight here on the E-mini. In fact, what I should do is I should do it like this. I should go above the other swing. That's a little stronger. So we have our trend change signal now. The market, very indecisive. This, if you're looking for a trade to follow me on, this may not be the one. Just because you see how our filter is breaking up, you see how our trend line is starting to waffle, you see how everything is starting to go a little bit more sideways versus, well, here's a good example of everything going up. See the trend line nice and steep. And then here we are and we're starting to get a little bit flat. We'll see. We'll see what comes of this. And I think I might bring my break-even trigger up a little bit here. But yes, you can definitely trade Forex. Any chart you can plot on NinjaTrader, whether that's the stock market or the Forex or the futures, if you can plot it, DTS will trade it for you. All right, we'll just watch this progress a little bit as I go back to your questions because I know I missed a bunch here. Yeah, like Joe says, in trading, less is more, definitely. Okay, Sean's asking, can you explain the difference between the Trade Manager and the Trailblazer? The biggest difference is this little component right down here, which is the risk management component. There's two modes. There's the risk percent mode and the manual mode. The manual mode will default to these quantities up here. The risk percent mode will default to this parameter right here, which is currently set at 2% of my trading capital. It also has this target feature, which is similar to the Trailblazer, where you can preset your profit targets. Right now I have it set all in, all out, so 100% on target 1, and currently target 1 is set at 20 ticks. So we still have the market floundering here quite a bit. Looking for the sellers to step up one more time, and then I will get more aggressive with my stop strategy. Other than that, they're almost the same. Here's the Trailblazer. You'll notice that little risk component at the bottom is missing. And you would set your profit or your trade size up here. So right now I have one trade on for 10 ticks. Why don't we make that 20 ticks because this is the NASDAQ. And then I have a second contract on as a runner. So when you don't have that risk management portion, you need to know approximately what your average position size would be. And you can preset that up here. So if I wanted, I could set a second target, say at 30 ticks, and let's say on average I take 3 trades, so I could set it up this way. And I'm just showing you guys this, so don't take the trade, but I'm just going to show you how this works. If I have a stop strategy in play, so my stops are enabled, let's give us a little bit more room here. If I hit the buy market button, notice I automatically get my stops. I have a break-even trigger in play, which I'm going to turn off for the moment. I have my first profit target at 20 ticks. I have my second profit target at 30 ticks. And I have my third on as a runner. See, I'm long 3. So I take profit on one, take profit on the second one, which leaves a third one on as a runner. All right. And here too, it will automatically roll my stops according to my pre-selected stop strategy. So that's how you can set all that up. So those are the main differences between your trade manager and your Trailblazer. The Trailblazer, what we had is we had some trade manager owners who said, can you make the trade manager so it's one click? So I don't have to go click for my entry, click for my stop loss. So you can preset your targets automatically. And then I have to click to submit the order. Can you do it so it's only one click? Well, they could, but they had to modify this risk manager portion. So that's the Trailblazer is the answer to that question. Can you make it a one-click system? Now, the Trailblazer or the Trade Manager can be used on any of the charts. I just happen to have the Trailblazer on the Raptor because I know very often those two are bundled together. And I have my Trade Manager on my my Hawk, my Falcon, and my Eagle, but you can put those any which way you want. You can put a Trailblazer on your DTS or a Trade Manager on your Raptor. Okay, so you see how the sellers are pressing here now? That's probably a good time for me to think about rolling my stop in. So I'm going to go with the swing high-low strategy, and I'm going to roll my stop. So now this is really I'm giving the sellers a little bit of leeway here. I'm not pressing them too hard because I want to give them a chance to get below these lows. But if they fail here, they would very likely tag my stop up here. So I may as well take the smaller loss if in fact they fail and trade higher. See, a lot of times what I'll do is I'll go with something like the bar high low and I'll follow it bar for bar. So I'll go say 2 bars back, 2 ticks off, and only give them that much. So you can see a a little bit of a congestion pattern. Oh, speaking of congestion, it's crude inventory today, isn't it? So do we have any kind of congestion on crude today? Well, I suppose the market's kind of stuck between here and here. What I want to show you is that we have this OCO feature where you can, OCO standing for one cancels other. And what you can do is you can, if you identify the market that's kind of ranging, as crude oil seems to be, you can bracket an order so that one side cancels the other side. And what I would do going into the inventory report is I would go with a more generous stop strategy, perhaps like the chandelier, which gives me a little bit more staying power. You have to remember when you use the OCO strategy, however, that these are live the moment you put them on your chart. So we've got about 5 minutes until inventory is released for crude oil. We'll see whether or not that sparks the market. Sean is asking, so if I have a set limit I risk with all trade entries, then I really only need the Trailblazer, am I correct? Yes, yes and no. Yes, I'm just going to move this over here so I can demonstrate. You don't want to be the guy who says, I'm going to trade 3 contracts, right? And you go like this, and you go like this, and you say, okay, I risk $165. That's great, but the market brings you in and stops you out. So you say, okay, I'm going to give myself a little bit more room. So I go down like this, and now all of a sudden it's a more plausible trade. You're still risking 3 contracts, but look at the risk amount. You're nearly $600, and yet you've seen that I can really only afford a $400 loss, right? So long as you know to limit your risk, then yes, the Trailblazer will work for you just fine. Like I say, the chief advantage to the Trailblazer is that it's more of a one-click system, right? So if you see a trade developing and you want to buy, you hit the buy market, or you want to sell, you hit the sell market, or you can enter an order manually. And again, these orders are live the moment you put them on, and then you can drag them into, wherever you want them to be. But don't be that guy who thinks that he's limiting risk because he's only trading 3 contracts and then placing your stop really, really tight so that the trade doesn't even have a chance to work out. Try to think more in terms of probability. Where can I set my stop that this trade actually has a chance? Well, there's a little swing low. This swing low down here is better, but look at the risk amount now if this goes south on me. And I see people do this all the time, and then they wonder why they blow up their accounts. See, if I stayed with the trade manager and I was only risking 2%, and I did the same trade way down here, trade manager says, yeah, okay, you can take it, but you can only take a single contract. So I would feel quite comfortable doing a trade like this. I would probably eliminate my profit target and hope to pick up a runner, but I got a whole lot of staying power here. Right? And now I see the market pressing, so I'm not quite convinced that they're going to go higher yet. If they formed one more bar higher, then I would start rolling my stop up. So even though it's initially $300 risk, I could start rolling it here, and now it would be about, what's that look like? About 150, 125 maybe. But yes, to answer your question, if you're able to limit your risk to an acceptable amount, then the Trailblazer should be fine for you. Okay, let's bring the crude back here and we'll see what happens out of inventory. If the market actually picks up a little momentum or not. I think if you're trading the stock indices today, you definitely want to be a seller, not so much a buyer. Fred is asking about some pricing and so on. I'm not that familiar with the pricing, Fred. Fred's asking about the 1995 package, if it comes with everything. I do believe that it's mentioned on the website, but if not, Adam at indicatorwarehouse.com is the fellow that you want to email. He will get you squared away. All right, a few seconds now until inventory release. This is always risky with crude oil. Crude oil is risky at the best of times, but we'll see. The market has been stuck for a little bit, and it's not unlike crude oil to give you a fake breakout either. So we'll see which way this flies. Oh, what happened there? Oh, I see. Yeah, so, oh, the chandelier was a little bit too snug for that. Darn. I should have wound my chandelier back a little bit more still. So they filled to the short side, but unfortunately this little hiccup here, the chandelier parameter was a touch too tight and stopped me out. That's all right. We'll get another chance at this one. Note to self, dial back that chandelier even more. Let's see. What if a 5? Yeah, maybe I'll do a 5 next time. That'll give me a lot of staying power. All right. So crude oil heading lower again. We can all look forward to lower prices at the pumps. Yeah, like that's going to happen. Sean is asking about that link for the add-ons. There you go, my friend. Yeah, like Mark says, one for the trade journal. Yeah, it certainly is. All right, so they're still floundering at these lows. Not quite sure what to do with themselves right now. Great comment here from Sean. Sean says, as a percentage of my account, I always trade with 10% of my account and I never change win or loss until my account has grown or shrank. When I enter a trade, I always risk 1.5 points and go for 3 points. I have to get used to the way that you guys look at risk. It's a different concept than I'm used to. I like the concept, but it seems very scary until I understand it better. It is different. Most people are totally unfamiliar with the idea of looking at the market more from a probability point of view. See, we've all been taught the risk-reward ratio idea where you try to get twice your reward versus your risk. But here's the problem with that. And here, I can use this chart right here. Here's the problem with this whole risk-reward ratio thing. It's all this right here, right? You don't know where the market's going to go next. I don't care if you're Warren Buffett, you don't know where the market's going to go next. Yes, you might have an idea where it's going to go, but you don't know for sure. So why would you base a trade based on something you don't know? Which is essentially what you're doing, right? You're basing, this is a green bar sell signal that we have, and you're basing this signal on the risk, or pardon me, the reward part of the trade, and yet you cannot control the reward part of the trade, and neither can you tell with any accuracy where the market will go next. So you get your risk reward trader who looks at this and he says, okay, there's my reward down here. Oops, I need to do that. So he says, my reward is down here, so I can only risk, I need at least a 2-to-1 risk reward ratio. So they set their trade like this and then like this, and they say, okay, I can take that trade. But what are you doing is you're manufacturing a trade, right? You're placing your stop based on what you think the reward is. and you don't know what the reward is. If this market makes even the slightest hiccup, you stop yourself out. So then you look at this trade and you say, well, the reward's down here. I should place my stop up here. And you go like this and you say, oh, I can't possibly take that trade. I don't even have a one-to-one reward to risk ratio, right? So you say, okay, I'm going to be smart. That's not a good trade. I'm going to avoid it. And what happens? The market heads lower. Now, contrast that with going with your percent mode. Now, there's a certain comfort in knowing, here I'm going to use my auto target. There's a certain comfort in knowing that your risk amount is an amount that you can afford. So if the trade goes south, or sideways, I should say, because in this case we're looking for it to go south. But if your trade goes sideways, there's a certain comfort in knowing I can afford that amount. So now I'm looking at the quality of the signal. I'm focusing on the quality of the signal. I'm not just looking at any old signal. I'm looking at the signal. I'm saying, that's a high probability signal. I know that's a high probability signal. Green bar cells are high probability signals. That's a signal that's unique to the eagle. So now you're looking at the probability of the signal itself and you're saying, okay, I know this signal has a high win ratio, a high follow through. So I look at taking this signal, where can I place my stop so that I give this trade the best chance of working out? Because the last thing I want is for the market to bring me in and then go into mini retracement mode, checking the highs. And the last thing I want is to get stopped only to watch the market fall off to my profit objective, right? It's happened to all of us. It's a part of trading. But you want to do your best to avoid this type of situation. So rather than strangle the trade by keeping an ultra tight stop to keep some sort of fictitious risk reward ratio, give yourself a chance. And you never look at that. You never know. The market heads down and now all of a sudden you have a $200 winner. Instead of passing on that trade entirely because you could not figure out a way to do a risk reward that would be palatable. Well, short of strangling the trade, right? Short of jamming your stops in so tight that maybe you get stopped out before the trade even has a chance to reach its profit target. So try to think in terms of probabilities, not in terms of risk-reward ratios. Probabilities will do much more for you. Find that high-quality signal and then go in with a position size that you can afford. Don't overcapitalize, because if the trade goes poorly, you're going to lose more than you can afford. Don't undercapitalize, because if the trade works out, you're going to limit your earnings. Right? Can you see why so many people fail at trading? Because that's precisely what they do. They lose too much, they earn too little. Yeah, way to go, Mark. I'm with you. Mark says, definitely a downward bias on the NQ this morning. He's hit 4 for 4 on the micro macro crossovers. Way to go. He says, definitely my favorite trade. I'm with you. That is one of my faves. The first micro macro cross, by the way, very easy to identify. It's when the micro line and macro line cross over and everything comes in sync. So we got red bars, red trend lines, red filter. Here's a first micro macro cross. Here was one to the upside. Oh, here was one that failed. Pay attention, folks. Here's something that you're never going to see another trading room moderator do. Show you a signal that failed. So there's your first micro macro cross. Comes in, flounders, and starts going the other way. So the signals are really good. They're quality signals, but they're not 100%. Sorry to burst that bubble. We haven't figured out the 100% signal yet. Here's another first micro macro cross so you can see how it prints. So micro line crosses macro line, everything comes into sync. A very, very high probability signal. We're getting a lot of yellow bars here though. And notice the yellow bars, this is on the Hawk scalper. This is an early clue that the market's starting to head into a sideways range. The yellow bars are pretty much all drifting sideways. If you threw a line through here, some traders refer to this as barbed wire, and you can see why. And just like barbed wire, it's easy to hurt yourself. So a good market to avoid, at least right now, until they can figure out which way they want to go. My money is on the downside. Yeah, way to go. Mark says he stayed out of this one because of all these yellow bars before it. And that's a very good call. See, Mark recognized these yellow bars, that the market was starting to cluster and go sideways. Maybe there was no follow through, and he was absolutely correct. So we're printing now a first micro macro cross to the upside. Are they going to try to give it a poke higher? Let's see what the other tools are telling us. We're into the hard edge here on the Eagle, which we normally anticipate some sort of reaction. Ditto here on the Raptor, we're into the hard edge. The Falcon working on a possible trend change signal. John asking, he says, sorry, I got here late. Can this be set up to auto trade? Well, yes and no. Yes, in that the trade manager will automatically manage your position via these blue dots. A no in the sense that you need to initiate the signal. Now, we do focus on certain high probability signals, so it's not like you're chasing every single signal. Adam is working on an auto trade system because there seems to be quite a bit of interest in that. And but as I mentioned before, the auto trade system is very conservative. It is ultra conservative. It takes maybe 1 or 2 signals a day. But as I've pointed out, you don't need to take a lot of signals, right? You just need to find a quality signal, something that you can leverage appropriately. Sean is asking, do you get the micro-macro crossover lines on the Raptor? No, you don't, but let me bring the Raptor over here. So here's the Raptor on the E-mini. Now the Raptor has its own set of high probability signals. Let me get rid of these lines. One of the signals, let me see if I can find you one here. I'm looking for a double pullback signal, which is a pretty good signal in the E-mini. Well, in the Raptor, I should say. But the market, where is going on here? It hasn't been producing many double pullback signals. Well, we're working on a double pullback here. What the double pullback signal does is you get 2 moves into the hard edge. Actually, this might be working into a double pullback, come to think of it. So you get 2 moves into the hard edge, and when it comes out, if it produces a sell signal right here, that is a high probability signal. We had the failure signal this morning. So here was a little buy signal based on the failure of the sell. Notice this was not a double pullback. This was just a single pullback off the hard edge. Here comes the sell signal. It fails, and it in turn produces a buy signal. So this was a probable buy based on this failure of the sell. Here was a double pullback that didn't trigger. So when it came down, if you were, I bet you Jim got on this one. If you were a little bit more aggressive, you could have sold the failure of the double pullback. The double pullback didn't materialize. It should have gone higher off of this buy signal, but instead it went lower, produced a sell signal right here. So you had a chance at a little bit of a move to the downside there. So each of the tools, whether it's the Hawk Scalper, the Falcon Swing Trader, the Eagle Trend Trader, or the Raptor, has its own set of unique high probability signals that we focus on. The trend change signal tends to be a high probability signal in the Raptor, and that's when the band flips over. That signal that you get when the band turns. So here's one right here. Took a little bit of heat. Again, all the more reason not to jam your stops in ultra tight. Took a little bit of heat, and then the market finally rallied. Here was a trend change to the downside. A little bit of follow through, not quite as much as we normally see. Was that off of, oh, that was near the London Open. So still working this double pullback now on the Raptor and looking for another bounce out of this trading band and perhaps a sell signal. Different Jim. James is asking, can you share some places I can get educated on the NinjaTrader? I'm a bird owner and need help with the Ninja platform. Well, you can do a couple things, James. You can go to the NinjaTrader forum, and you can just do a Google search for that, NinjaTrader forum. They have got loads of tutorials. You can try checking YouTube. You can always email NinjaTrader, or you can also email us, and you can email Ben at support@indicatorwarehouse.com. Or if you're really stuck, and I say really stuck because I am not Mr. Techno, but I do know my way around NinjaTrader a little bit, you can also email me. So there's my email. Yeah, NinjaTrader, a fairly short learning curve, but it is a little bit different from some, especially in the way that it handles its workspaces. That took a little bit for me to get used to also. But one thing I'll tell you, the folks at NinjaTrader, their support is outstanding. They will do everything they can to get you squared away with their software. So don't hesitate for a moment to contact them. The few times I've had to deal with them, like I said, they've been over the top helpful. All right, let's see what we got going on here. I want to make sure I didn't miss anybody's question. Same James says, I got a hole in my data. How can I recollect it? How do I get it up to date for daily intraday trading? Well, reload historical data usually will fix that. You can try that. If not, it might be a glitch with your data feed. You might need to talk to your broker and make sure the data feed hasn't been interrupted. Jim says, Eric, you should change the colors on your Raptor. It's making him nauseous. I know Jim changed his. Um, you can change all your parameters here. The one nice thing about the Raptor is you can change a lot of stuff. So there's the colors right here. Okay, so the NQ, came with a trend change signal right here. A little bit of a hiccup to the upside now. Wow, are they really going to try to get into that opening gap? There was a little bit of a gap this morning off of the open. No way. Wow. Stronger than I thought. Oh, yeah. Jim says you might have to reset your platform, James. That's true too. Sometimes that will fix a lot of problems. And I think you can do that under the options window. Hold on a second here. No, I can't find it. All right, let's see. What else do we have going on here? Anything interesting? Crude oil on a little bit of a rally now after the early decline. They put on the brakes. So they bounced off the primary support. They're trading at the median line. Gave us a little bit of a trend change signal here. So here's our up. The trend line changes color. Here's the down. Here comes the up. This is a buy signal. All right, well, I missed the macro pullback here. I got thinking, which is never a good thing. So here was the first micro-macro cross, and kudos to you guys who took that one because, well, you know what? I guess the test of the extreme was right down here, wasn't it? Yeah, I missed that real time, but in hindsight, I can see quite plainly that the market tested the low, failed, went higher, broke the high. So when you break a swing like this, you can expect two moves in the direction of the breakout. So here's move number one. Move number one actually had enough to it to hit your profit objective, and then you come back with a macro pullback signal. So this is going to be press number two now in the direction of the breakout. So there within the span of a couple of minutes, you had two solid signals. Could have picked up a tidy profit on each. Oh well, won't be the last trade I miss, pretty sure of that. And then we go back into yet another macro pullback. Now, this macro pullback and this macro pullback are pretty much the same. I'm not sure I would actually count these separately. The reason I mention that is very often you only see two macro pullbacks within a trend. But since these two are practically at the same price level and they occurred so quickly, I think they're pretty much the same. So there we go, 3 good trades within the span of about 5 minutes. That could have been my day right there. That could have been my 3-day day, my 3-trade day. Oh, there it is. Thanks, Jim. Hold on. I'll show you, James, where you go. Jim is more techno than I am. So you go to your tools and you go down to options and you go over here to data. That's where it is. Thanks, Jim. So you hit reset database and that should fix stuff. If it does not, try repair database. This is kind of the H-bomb of resets on NinjaTrader, so you want to be selective when you use it, but the reset database should fix it up most times. Did I say H-bomb? I'm dating myself. A-bomb, cruise missile. There we go. It's the cruise missile of resets. Even cruise missiles are starting to get antiquated. Oh, they are. They're still pressing. Wow. Well, it looks like they are going to try to get into that gap that we saw this morning. Just for giggles and grins, let's see what's been going on in the soybean market, which has been super active. Soybeans falling out of bed yesterday. Let's see what they've been doing today. Yeah, recovering somewhat from yesterday's rather substantial decline. Here's soybeans. If you guys are ever looking for a market to trade, soybeans are a great little market. They're not the fastest of markets, but I tell you, when they pick a direction, watch out. Just huge, huge day. And the tick value here is insane. It's $12.50 a tick, but just take a look at these profits that you can get. That hit the $500 profit, and I doubled my profit objectives. This was a $1,000 day in soybeans, or maybe not quite, $800. Still, a lot of money. And not as volatile as a market like crude oil. So you kind of get the best of both worlds. You get the big follow through without the monster volatility. All right, folks, unless somebody has any questions, if I've missed your question, please cut and paste it and I will be happy to answer it. I do have an appointment at 8:30 at the bottom of the hour, so I'm going to have to close up the room here in a moment. And run. No questions? All right. Well, if you have any questions, you do have my email address. You have Adam's email address. Feel free to email. I'll do my best to answer your questions for you. Oh, a nice late filter entry signal. Here, we'll close the session on this. Very high probability signal in your Falcon. Your filter does not, or pardon me, your trend line does not go out of sync, but your filter does. Everything comes back into sync and generates a signal. So once again, we have green bars, green trend line. Now we have a green filter. Very, very high probability signal. In this one, I probably would have taken above the high, just because I'm a little bit of a chicken that way. But look at that, very good follow through. All right, you guys, thank you very much for your attendance today. I hope that you got a little bit something out of our time together. If next Wednesday will be another open house. DTS owners, our trading room resumes this Monday, the 13th. So I will see you guys then. We'll talk to you soon. Bye for now.